Fitch Ratings expects the GCC countries to continue to be among the largest emerging market US dollar debt and Sukuk issuers in 2026. The GCC debt capital market is expected to surpass $1.25 trillion in 2026. Growth drivers include cross-sector diversification and refinancing goals, funding deficits in projects, and government initiatives. Forecasted lower oil prices and Fed rate cuts could drive further growth. Most GCC issuers maintain strong market access in 2025 and so far in 2026 despite global and regional shocks. However, the DCMs remain exposed to oil price and interest rate volatility, geopolitical risks, and new Sharia requirements for Sukuk. GCC outstanding DCM surpassed $1.1 trillion in 2025, up over 14% year-on-year. Sukuk share of the DCM outstanding reached a record 41%. GCC dollar Sukuk issuance surpassed $70 billion, up over 72% year-on-year, outpacing bonds which grew by about 26% year-on-year. In emerging markets excluding China, the GCC accounted for 35% of dollar debt issued in 2025 and 81% of dollar Sukuk issued. The Saudi Exchange launched its fixed income market-making framework. The UAE launched an Islamic finance and halal industry strategy with Sukuk growth plans. Kuwait issued $11.25 billion in sovereign bonds, its first in 8 years. Oman's DCM is likely to grow more conservatively as it continues to deleverage. Qatar launched the second phase of its primary dealer framework. Digitally native notes have emerged in Qatar and the UAE. Many GCC issuers, mainly Saudi, are increasingly utilizing alternative funding tools such as private credit, syndicated financing, and certificates of deposit. GCC dollar issuance surged in 2025, however, local currency issuance was mixed across the GCC and mostly sovereign-driven. Around 84% of Fitch-rated Sukuk in the GCC are investment grade, with 63.2% in the A category and 90% of issuers on stable outlooks. Fitch rated around 70% of the GCC dollar Sukuk market outstanding at end 2025.